RMB published its Where to Invest in Africa report with the theme Money Talks. For more on the findings, I'm joined by Celeste Fauconnier from RMB. Celeste, thanks so much for your time.
Thank you.
So tell me about the theme Money Talks. Why that specific theme?
So just looking at Africa over the past 3 years, we've been seeing significant liquidity shortages, and that obviously coming from lower commodity prices, China not doing that well, and exports and imports also just struggling from that perspective. So essentially we want to show where are the major hard currencies coming from into Africa, and that highlights where the opportunities are and then also naturally where the challenges are.
There were some significant movements, especially in the top 10, Nigeria and Algeria, for instance. But let's talk about South Africa losing that #1 coveted spot.
Unfortunately, we did. But if we look at the actual scorings of the methodology, Egypt just trumped South Africa by a 0.02 percentage point. So it's definitely neck on neck. But the reason for this is if we look at our methodology, we actually look at growth. It's one of the indicators within that. And we saw that South Africa's growth rates are not doing as well as we see in North Africa and in fact the rest of sub-Saharan Africa. So unfortunately that brought it down quite significantly when we look at the scoring. Of course also we've got some changes in our operating environment scoring for South Africa. At least we are still in the top 5 best business environments in Africa, but unfortunately we also came down in that respect. So being two of our main indicators, your business environment and growth, unfortunately South Africa was not performing that well.
What are some of the concerns? Because a lot of people talk about loss of independence of key institutions like the judiciary, for instance. What are some of the other ones that you may have picked up?
Well, that was definitely one of the key aspects where we saw a drop in the scorings from your World Economic Forum's competitiveness report, etc. But also looking at your labour market, that's also one of the aspects that when investors come into South Africa that concerns them. So there are obviously other aspects. Political risk has also increased in Africa, or South Africa specifically. So it's a number of things that's brought that scoring down.
Nigeria seems to be a little under pressure. There were some liquidity problems. Is that part of the reason why it sort of has, I suppose, moved a bit?
Absolutely. So if we look at liquidity, we look at it from an operating environment perspective. We have seen that the country struggled significantly. Obviously, the oil prices that came down. And that means that the hard currency was less coming into the market. We have seen that improve since last year. The central bank has thrown everything and the kitchen sink at it to fix the liquidity. But unfortunately, again, looking at the methodology, if we look at growth, Nigeria hit a recession last year. And if we look at recent growth rates, they only now recently came out of the technical recession and probably only a 1% growth rate over the next 3 years. Also, a big indicator in our methodology is the market size. Nigeria is not the largest market in Africa anymore. It always is between South Africa, Egypt and Nigeria. But because Egypt showed significant growth rates compared to those two countries, Egypt is now the #1 largest market in Africa.
So Ethiopia and Rwanda climbed up. What exactly did they do to, sort of boost their own ratings?
I think it's twofold. They have done things to improve the ratings, but there's also other countries that didn't do as well. So it obviously shifted them up. But from Ethiopia's perspective, it's now in our top 5. It's quite a significant move. We do know that Ethiopia is still a very difficult business environment. Very hard to repatriate your dollars out of it. Also very difficult to bring business into the market. But the reason for this is that the government is protecting its economy. They're actually building and industrializing their economy from within. And I do believe over the next few years, we will see them open up the market to international investors. But with this investment into their own local industries, we see a 7% growth rate. So doing very well from that perspective. Very similar thing in Rwanda. It's a landlocked economy. It doesn't really have resources. So the government decided we have to open it up for investment. And that has been helping it. One of the fastest reforming economies when it comes to its business environment. Yet, we have to highlight the risk. It is still a very small economy.
Yeah. Now, Kenya, one of its neighbors, is at #6. What exactly is attracting investors there?
Well, I think it's because the market has been very diversified compared to the rest of sub-Saharan Africa. In fact, if we just look at the currency and how it performed over the past 2 years, it has been one of the most stable currencies, meaning it gets liquidity from other aspects, not just from one type of commodity. It's got agriculture, its services sector is doing very well. So, and obviously the government is also investing heavily into infrastructure. So from all those aspects, we will see a growth rate of about 4%. It's still one of the largest markets in East Africa.
Yeah.
So naturally, I believe East Africa will remain, specifically Kenya, in the top 10 for the foreseeable future. And of course, it's got oil and gas coming online.
Where does Tanzania feature in that top 10?
Very close. It's in 7 spots, so those two are jostling for those spaces. However, Tanzania's business environment is still quite tricky compared to Kenya's. They've got a lot of work to do from that perspective. A very good example is how the government is getting involved, unfortunately, in the mining industry, or almost screaming nationalization. So those risks are highlighted within the publication, but again, methodology. Tanzania is going to grow by 6%. We see significant influx of FDI into the country because of the oil and gas sector. So naturally, we would see it remain in the top 10, very similar to Kenya.
Okay, so let's look a little more at the West African region. Cote d'Ivoire and Ghana, where do they fare in that top 10?
So Ghana is number 5 and Cote d'Ivoire is number 10. Ghana actually slipped from number 4 last year. It's not because they haven't been doing well. It's Ethiopia has trumped it. Ghana is also, again, one of the best operating environments in Africa. And we have seen the IMF help them significantly over the past 3 years. So that has transformed the economy from a structural perspective. And also we can see that the oil sector is helping it gain growth again within that sector. We see oil prices will recover slightly, but your oil production is the key driver for Ghana at the moment. And of course, we know it's one of the most democratic countries in sub-Saharan Africa. And then from looking at Cote d'Ivoire, it's really the darling of West Africa. It has been so for the past 3 years, but we have to highlight the risk there. We have seen there's been some political turmoil in 2016 and 2017. However, we have seen that the political risk has actually dissociated itself from the financial markets. Its Eurobond is still one of the best performing in Africa. We still see a significant amount of foreign direct investment going into the economy, which is also going to make Cote d'Ivoire one of the 4 fastest growing economies in SSA.
Let's talk about South Africa's neighbours, Botswana, Mauritius and Namibia. You were talking about the size a little bit earlier on. Is that the reason that they don't fit into the top 10 because they're a bit too small?
Absolutely. So again, the methodology, market size is a strong indicator there, and unfortunately their markets are very small compared to the rest of sub-Saharan Africa and specifically South Africa. But we mention it in the publication as a noteworthy mention because they are still investment grade economies. Yes, Namibia was downgraded recently, but one of the ratings agencies still has it as an investment grade. Mauritius investment grade, Botswana in fact the best rated economy in sub-Saharan Africa. So they are definitely the less risky environments to invest in. A lot of our clients are doing very well there. But those markets are small and becoming more and more saturated.
All right, thanks so much, Celeste.
Thank you.
That's Celeste Fauconnier from Rand Merchant Bank.